Kaustubh Belapurkar is the Director of Fund Research at Morningstar Adviser and now joins in. Kaustubh, good morning to you and thanks so much for taking time out and joining in. Let's talk about the kind of move that we've seen and how you would characterize the outperformance that we started off the year 2021 with for the mid and the small cap indices. Do you believe that valuations here are justified?
So morning, everyone. I think you've kind of really touched upon the right sort of trend here, where we've clearly seen that 2020 and continuation in 2021. We've seen mid and small caps continue to rally. Ever since the market sort of took off from the bottom made in March of 2020. I think the interesting bit from our perspective is that obviously mid caps did make new highs, but small caps are still off the highs that they made in early 2018, about 5-10% on the indices. But I think what's more important is that in terms of valuations, the way we look at things, clearly, both small and mid caps on the index level are trading very much into the overvalued zone. And from our perspective, we would think that while large caps are also slightly overvalued, but they still make a better sort of relative place compared to small and mid caps. So we are taking a more cautious stance when it comes to allocating in small and mid cap strategies.
Okay, fair enough. And, Kaustubh, just wanted to get in your take as to what the outlook is in terms of how investors really should be approaching the mid and the small cap universe as a whole. Do you believe that investments in the mid and the small cap funds is a strategy that one can adopt for the long haul? And why is it that you believe it would be, say, a preferable alternative or looking smarter for this year, for the next few years ahead compared to the frontliners?
Sure. So I think, some very valid questions, Ivan. And, I think it's very important to lay the context, right? When we think of mid and small caps, while we say they're, potentially low valued right now, it does not mean that, we say that stay away from them from an investor's perspective. What we're saying is that you do invest, but you would want to take a slightly more staggered investment approach. And very clearly, as an investor, you need to have the right time horizon in mind. When we talk about the right time horizon, I would say anywhere in excess of 7 to 10 years minimum is what you need to have, because we have seen, and history has taught us that drawdowns in this segment can be pretty sharp. We've seen drawdowns in excess of 70-80% back in 2008. Even the drawdown, which was fairly elongated from the highs of early 2018 till about 2020, for almost 2 years, we were down about 50-odd% on these indices. So clearly drawdowns can be sharp and they can be prolonged. So I think investors need to first come into that mindset that, look, I need to park this money away for the long term. And when we say long term, at least 7 to 10 years, do not think about mid and small caps, anything less than that, especially in these times when obviously valuations have run up. And secondly, be ready that there could be blips and significant blips in terms of drawdowns on your portfolio value. But as long as you have the right time horizon, the right sort of investment approach, you should be in a comfortable job, because mid and small caps really are your sort of wealth generators of the long term, but you just need to have the right approach to investing in that.
In terms of perhaps where within the broader markets you're finding opportunity, Kaustubh, any particular trends that you're picking up?
We've been very, very traditional asset allocators. So what we have done is, one is, we've been frequently rebalancing our portfolio. So we actually took up our equity exposure when the March crash happened. At the same time, we've actually been pruning exposure since the month of June, looking at, that's the overall equity exposure. And obviously, we've actually gone underweight mid and small caps to the extent of almost 20-25% of our strategic allocation in these. So our most aggressive portfolio, if it had a 30% weight, we've brought it down to almost 25% in mid and small caps, given where valuations stand. But, I think there are very interesting opportunities. One is the index, obviously, which the market tracks. But I think in terms of funds and alpha generation, there's some great mid and small cap managers there. And I think we're just popping some names up on the screen for the listeners that we really gone ahead and thought that these are the guys who've really kind of cut their teeth in terms of building up that research for the small and mid caps, and very, very experienced managers on this front, be it from the likes of HDFC, TSP, Kotak, SBI, Franklin, both in the mid and small cap side. We think that there's some excellent opportunities there. Just come at the right time horizon. Stay invested, because we've seen the returns have been so polarized even in this segment, to where obviously certain stocks from certain sectors, even in the mid and small cap side, especially the healthcare and the tech names, have done really well in 2020. But don't be fazed by that. I think just kind of stick to your investment approach, stick to your asset allocation as an investor. That's what we would recommend. That's how we would approach investing in general, and obviously with related to mid and small cap funds too.
And what is a realistic return or an average return that investor can really look forward to in some of these funds now going forward?
I'll go on a limb, say that it's probably not going to be as good as it's been in the past, especially given the valuations we're entering at right now. If you just look at where the indices stand, and a lot of the stocks have moved up so significantly. But over a 7-10 year horizon, you should be in a reasonable position to outperform, say, the broader market or the benchmarks by 200-300 basis points, get into the teens in terms of returns is what we would expect. I'm going on a little bit of a limb saying that, but I think you have to kind of stagger your investments, because if you have some certain chunk of money to put in right now, don't do that at one shot given where the market levels are. Look at kind of staggering that over the next 12 months at least. And be realistic with the expectations. We've seen some significant returns come in since March, and investors shouldn't get carried away. Close to almost, the indices are close to about almost like 100% up. But I think I just want to take that sort of pause there. That we've seen periods and elongated periods of negative to sort of flattish returns. So, but I think somewhere in the lower to sort of teen digits, something over a 10-year horizon should be a reasonable option, given the alpha that even the small and mid cap managers can generate.